Good morning. It's a beautiful morning. It's what the time? It's 3:16, and today is going to be such a wonderful day. And the topic today is technical and fundamental analysis, the introductory topic. And this session was not held online with the community because it's an introductory topic, and I thought it's best if I record it and upload it to YouTube just so everyone can catch up. Sorry about this. Just so everyone can catch up and understand that some people are doing their national service and some people are also taking additional courses to the course they're already offering in uni to sharpen their skills, and that's amazing. So whatever you are into or whatever you are doing, please catch up with the sessions we've previously done so you can be updated with what is going on in the group. And next week is going to be full technical analysis. We are going to start our technical analysis fully from next week, and it's going to be very amazing. We are going to get insights into how to break down the market, how to read price, how to predict the next price movement. It's going to be very, very amazing. So please catch up with the sessions, catch up with the classes, and make sure you are up to date. Now, technical and fundamental analysis, and these are the two main types. There's three, honestly, and the third one is sentimental. We spoke a bit about it in the slides, so I'm not going to go into it because it's irrelevant to us. We are focusing on technical and then fundamental. So technical and fundamental analysis introductory topic presented to you by Desmond Kidd. Sorry about that. There's a table of contents. Let's go straight into it. Know when to buy or sell, building a bias. And obviously in the image here you can see the table has 3 legs. It's supposed to be 4, but 3 legs. Some table do stand on 3 legs. So technical, fundamental, and sentimental analysis. However, sentimental analysis is very, very irrelevant to us, but we need to know a bit about it just so we can aid our future price analysis skill. So building a bias. To build a bias, you have to have a foundation, and what I mean by that is just like building a house, you have to have a foundation. You can't just stand up and then build a house, you understand? You can't just stand up and then say, boom, you've put the house on this land. You have to dig a foundation and then place the house on the foundation. So it's the same as what we are doing here. Before you build a bias or before you read the price of any asset class you are interested in, you have to have a foundation for reading the price or building that bias. And what are the foundation for us? What are the foundation available to us when we want to build a bias? There are 2, technical and fundamental analysis. I mentioned earlier there is sentiment analysis, but it's very irrelevant to us. But then there's a way it can aid your technical and fundamental analysis in order to build a bias, and I'll explain that too so that everybody is aware of what actually goes on. Yes, so there are 2 main types of analysis the markets. There are 2 main types of analyzing the markets to develop an idea to trade. And the first is technical analysis. The second one is fundamental analysis. Let's go straight into it. Technical analysis. Technical analysts believe everything is already in the charts, and because technical analysis is a typical representation of historical price data, or not even typical, it is a representation of historical price data or price action. Understand? It's reflects what price has already done and is likely going to repeat itself in the future. You understand? So technical analysis at its core is the study of price charts and patterns, historical price action and volume to forecast possible future price movements. So at its core, you study the old, or you study the previous charts, or you study the previous patterns, or you study the historical price data or historical price action of the asset class you are monitoring. So let's say you're interested in XAG USD, that's silver against dollar. You're interested in silver and then you want to trade the silver market. But you want to build a bias and you don't know how to build a bias. You are looking for a foundation to build that bias. You can use technical analysis to build that bias by studying the old price charts. You understand? So you go back in time and then you study the price data of XAG USD, and then you use that old price data and then the present one to forecast what XAG USD is going to do next. You understand? So there's a way we read it, and then that's what we'll be doing starting next week. So yes, technical analysis at its core, again, I'm reading it again and you have to catch this, is the study of price charts and patterns. So it's believed that there are certain patterns that occur in the markets that keep occurring or keep repeating itself, and as you already know, history repeats itself, right? So historical price action and volume to forecast possible future price movements. You understand? So you accumulate all these things, or your study of these things, just to forecast future price movements. Traders utilize various tools applied to price charts such as trend lines, moving averages, and other technical indicators to identify potential entry and exit points. Now, technical analysis has a lot to it, you understand, and we believe in a specific concept used to read the charts in our community. Not every trader in our community, we believe in a specific concept that we used to read the price charts that is beneficial to us and has always been beneficial and profitable to us. So you stick with what is profitable, right? Exactly. So there are a lot of things mentioned here, or a lot of things I've listed here, but they are not of relevance. They are not of much relevance to us because we have streamlined our focus to a specific concept or a specific ideology that we use to analyze the charts. Whilst these tools that I've mentioned here are important to other traders and are helpful and profitable to them, we streamline our focus to a specific concept or ideology. But then I'm going to go through it just to make you understand what exactly it is. It may help you, or it may be what you resonate with and want to use, you understand? So traders utilize various tools applied to price charts such as trend lines. So trend lines are tools you can use to monitor the trend of price, and when price is in an uptrend, you can take your trend line, hook it from the starting range of that uptrend to the current range of that uptrend, and then wait for price to bounce off of that trend line again. And when it's bouncing off of that trend line, you can take your entry and then put your stop loss below the trend line, put your take profits above or at the high that was recently created before price started going down to hit the trend line again, and then you can see profits from there. Also, moving averages, they are indicators that monitor the movement of price in days. So the span is in days. It looks at price from, you can set it to however days you are comfortable with. You can set 200 days, 50 days, 200 days, and it's going to give you an indication on what price is going to do on what price is going to do from the analysis it has done from the 200 days you've set for it. Do you understand? So moving average is kind of like how you want market to view the price you are monitoring. If you want it to view it in 200 days ranges, that's what it's going to do, and it's going to forecast price according to the 200-day range you've given to it to monitor. You understand? And other technical indicators to identify potential entry and exit points. So there are many other technical indicators like Elliott waves, candlestick bible, and candlestick bible is basically the language of the markets, and it teaches you what each candle means. Some candle may look like a closing candle, a candle that has not extended its body, and they identify that as doji. They have many names they call these candles. You understand? Others study in depth the concepts and principles of price action to develop a trading strategy, and then this is where we fall into as a community. This is our category as a community. Examples of such concepts are ICT, that's inner circle trader concepts, support and resistance, supply and demand, algo trading, smart money concepts, and many more. Others use price action, candlestick patterns, etc. The main evidence for using technical analysis is that theoretically all market information is reflected in the price. So all market information is reflected in the price, and strong technical analysts, that's people who believe so much in technical analysis will tell you even fundamentals is contained in the technical analysis. That means whatever fundamental analysis has done, it reflects in the historical price data. You understand? It reflects in the historical price data, so they don't. Okay, we are back, and sorry guys, I had to quickly go make something because my throat was very dry. So technical analysts believe everything is in the price data, it's in the historical price data, and whatever is going to happen in the future has already happened and is already contained in the price data. So they don't really concern themselves with fundamentals, because guess what? Last month NFP was out, FOMC was out, CPI was out, and then it reflects in the price data. Understand? So if they want to know what price is going to do next, the following month, they just have to go back and then study what price did when those news events were dropping. Do you understand? So the main evidence for using technical analysis is that theoretically all market information is reflected in the price. So that's what they believe, that everything is already in the price. They don't have to go and then be chasing fundamental news. They just have to look at what has already happened, and they can use that to forecast their price movements. So let me come back to this, the in-depth study. So there are concepts like ICT, inner circle trader, created by Michael J. Huddleston, and that's what we use here as a community. You can see that I made a bold and I underlined it just to keep the emphasis on it. Support and resistance. This is an old concept and is believed that price bounces off of certain levels. Supply and demand, which I believe stems from ICT, came out of is a watered down version of ICT. Algo trading, I don't really know what that is, but I had to add it because some people may not find it easy to trade these concepts that I've mentioned, like the ICT, support and resistance, but when they go and do their research and then they find algo trading and then it's good for them, then they can do that. Understand? I'm not forcing anybody to stay with one concept. That's why I'm introducing everything to you so that you can pick and choose what you think is best for you. And smart money concepts, which is also a product of ICT concepts. So technical analysis, it's all in the charts. I mentioned earlier, they believe everything that has happened or will happen has already happened, and it's all in the charts. So they don't have to go chase fundamentals. They don't have to go chase fundamentals. They don't have to go open news sites to be waiting for the next news. They believe it has already happened, and then if they are able to steady go back into historical price data and study it well, it will give them a clear view of where price is trying to go, and then they'll chase price from that place onwards. So example of technical analysis, when the Australian dollar, what is CHF? Swiss franc, right? Yeah, Swiss franc. Yeah, CHF. Yes. Using a trend line. So I mentioned earlier that the trend line is a tool you use to monitor trends, or you use to predict trends. And you can see that a trend line was drawn from point 1, touch point 1, touch point 2, touch point 3, touch point 4. And then you can see that the trader took his trade on the point 4. You understand? So the trend line, you anchor it to a specific trend. If it's a downtrend, you anchor it to the lower high, down to the most recent lower high. You understand? And then you wait for price to go down, come up and touch the line again to create a new lower high. Then you take your entry from there. Of course, saying it sounds very, very easy, but then doing it is not as easy as what I'm saying. Talk is very cheap. Understand? So yes, you saw that the 4-hour touch at the fourth touch, sorry, not the 4-hour touch. So it touched the trend line, first touch, second touch, third touch, and on the fourth touch, the trader was monitoring this specific trade because he knew that on the fourth touch it's going to go down, and then he'll make some profits from it. So this is the use of trend line. Technical analysis again is very, very subjective. So you can look at the same charts and have different points of views. It's not a con thing where I say I'm looking at this price chart and then this is what I'm getting from it, so therefore another trader should get the same thing from it. You can look at the same price chart and yet have different points of views. You understand? It is also probabilistic. Technical analysis is very probabilistic. All analysis are very probabilistic. You understand? You don't win consistently with a certain type of analysis. The most detrimental analysis I know of is fundamental analysis. That thing can whipsaw you any day, any time. You understand? It's the most unsure analysis I've ever met in this life. You understand? Where you are waiting for someone to send a tweet to Twitter and see how investors react to that tweet before you buy or sell. You are waiting for some guy to come and release data on what the currency or the position of the country's currency is going to be before you trade, right? You can whipsaw you. You can go up, down, up again, down again before it goes its clear direction. You understand? So it's also very probabilistic. Same way technical analysis is very probabilistic. You have a method you are using to monitor price, right? But it's not sure it's going to be hitting target every single trade. Understand? You just have a probability of it hitting target. Let's say you have a win rate of 70% or 80% or even 90%. That means the remaining 10% can still be a failed trade. You understand? Just because a pattern worked today does not mean it will work tomorrow. In technical analysis, the charts make it easier to know when and where to enter or exit trade, since it's more visual. With technical analysis, you have a clear visual of what the price is doing. You have a clear visuals of the historical price and then the present price, so you can use it to forecast the future price. You understand? It's very, very clear. You are looking at candlesticks. From my research, traders used to draw charts. You understand? They used to draw it on paper before they read it, and then I can imagine how difficult that would have been. Thank God for technology, or else we would have been sitting down. They call them floor traders. They sit down on the floor, then they draw the price chart on the floor or on papers. You understand? So they used to have stacks of papers and whatever. I'm not, what I'm saying is not very accurate because it was a shallow research I did. You understand? Call them floor traders. Another example is using support and resistance, and I mentioned it earlier. Support and resistance is something I do not even want to be hearing. You understand? Because people just believe there is a zone in price, that when price gets to, it bounces off of that zone. What is going on in that zone? You understand? Why is there a zone in price that price is going to bounce off of? You understand? Why should there be a zone? So price is moving and then it just meets some zone in the sky, because you definitely aren't seeing a zone in the chart. You understand? You just see price action happening at a specific point and then you take your trades off of there. You understand? But since millions of people have tried to decode the market, they come up with theories that aid them understand the market. So as much as I think it's very relevant and it's non-profitable, it's profitable to some other people. Do you understand? And then I'm not against it. Whatever profits you is whatever you use. You understand? You see, price is rejected twice in that zone means it is a support zone. So price hit here first time, second time, and then on the third time you'll be timing this market. On the third time you can take your entry because it is believed that that is a zone. You understand? And I'm not in support of this, so let's quickly get out of here. Wow. And this is profitable to some people. You understand? The whole point of trading is to make money, you see. So if support and resistance is profitable to you, stick to it. You don't have to change it and come in. But our community, that means everybody in this community has agreed to use ICT. And if you've not agreed and you think there's a better concept or ideology or theory out there that you can use to analyze the market that is best for you, please do. You have nobody's locked to the community. Understand? You can go ahead and then join other communities and then explore your options. You get what I'm saying? Again, the point of trading is to make money. So don't hook yourself to something that is not working for you. If it's working for someone else, it means it can work for you. But if it's not working for you, explore your options. This is what has worked for us, ICT concept. So that's what we stick to. Now, fundamental analysis. Fundamental analysis is very uncertain. That's what I call it. And the truth is, all types of analysis are uncertain. Sorry about that. All types of analysis are uncertain, but there are certainty rates. Do you understand? So, fundamental analysis, per my rating, I would give it a 60% certainty rate. And technical analysis, I would give it an 88% certainty rate based on the strategy and the concepts we employ in our community. Again, based on the strategy and the concepts we have employed in our community. So fundamental analysis, where one tweet can change everything. Where one tweet can change everything, or one occurrence. I remember, let me see if I can pull that up for you. I remember somewhere November when last year November, where Trump was announced the president of the United States. Wow, I predicted BTC will fall all the way to this level, and it did. So let's go back to so yes, you can see the price action from October, November. Wow. So yes, look at the price action for November. This is November, and Trump was, I believe BTC is going to continue going down, but this is not our focus now. When Trump was announced president, you can see Bitcoin price rallying. It was rallying upwards with force. You understand? So yeah, that is a fundamental analysis where some occurrence can disrupt the market, or a tweet can disrupt the market. You get what I'm saying? So investors believe Trump is going to create opportunities for more cash flow in the system. So when they saw that Trump was elected president, they were happy and excited, and they knew that it's going to open room for other countries to invest and not worry about their funds, because Trump is very, very capable of multiplying their money. You understand? So you can see the price of BTC, and not just BTC, but emphasis on BTC, because at the time that's what I was monitoring. I was just seeing BTC price spiral upwards. It was going up with some energy. You understand? Exactly. So while most traders focus solely on technicals, the fundamental analysis of currencies is also very important. To us, it's very important. That's why I added it. Some people believe it is not. You understand? And then we use fundamental to aid our technical analysis. You get what I'm trying to say? So there are cases where we've planned our technicals. We are just waiting for some fundamental news to push price to a certain zone before we take our entry. You understand? So to us, we believe fundamental is also very important, because I would say it is the force of the market. You understand? It is the force of the market. Fundamentals come in to restructure the market most times. You understand? So something that has the power to restructure the market should not be considered irrelevant. You understand? Because when fundamental comes out, it has the ability to push market to certain zones fast. You get what I'm trying to say? So yeah, it's very, very important. Whilst technical analysis involves pondering, I'll change that. Pondering over charts to identify patterns and trends. Fundamental analysis involves pondering over economic data reports and news headlines. So you look at economic data reports in the fundamental analysis, or news headlines. So I just changed it. This is amazing. Wow. I just changed it. So whilst technical analysis involves pondering over charts to identify patterns or trends, fundamental analysis involves pondering over economic data reports and news headlines. So you wait for economic data reports like FOMC, unemployment data releases, CPI, NFP, non-farm payroll, all these things. You look at it and then you think clearly about it. You think about the previous ones, you think about the numbers, you think about how they derived at those reports, and then you try and forecast what the report is going to be in the current month. And then when it comes out, you look at that report and then you use that report to aid your trade. You understand? That's if you're a fundamental analyst. You use that report to aid your trade. You use that report to what's the best word to use, to place trades. You understand what I'm trying to say? In simple terms, it's all supply and demand. The hard part is analyzing all of the factors that affect supply and demand. So in simple terms, the currency pairs are subject to the laws of supply and demand. You understand? The more the currency pair is demanded, the higher the price of it, and then the less is demanded, the lower the price of it. But the hard part is analyzing all of the factors that affect the supply and demand. So when an economic data release like FOMC is coming out, how you are going to analyze that data release and try and fix it into the role it plays concerning the market movement is what is considered the hard part. You understand? So you look at something like FOMC, NFP, CPI, unemployment data releases, and then you are trying to figure out, okay, now that I have this data, how do I fix it into the whole fundamental analysis thing? How does it work? How do I use this to predict or forecast price movement? You understand what I'm trying to say? That's the hard part of it. So in simple terms, it's all supply and demand. And I mentioned earlier that there are also watered down versions from ICT. But you see, the thing is, everything is a theory, is a concept found by someone. Do you understand? So as much as I would say it's from ICT concept, someone will also argue and say no, supply and demand is a law that exists already. You understand? A law that exists already. So you can't say it comes from ICT or it does this or it does that. You understand? And that's perfectly fine. As long as it profits you, that's perfectly fine. But for what we have come to believe supply and demand to be concerning trading and technical analysis, there are specific zones where people look for price to bounce off of. Do you understand? It doesn't follow the natural law of supply and demand. So when we try to look at it from this perspective, we can say, okay, it comes from the ICT concepts. But when we follow the natural law of supply and demand, that doesn't apply. You understand? Some of these factors are interest rates, unemployment rates, NFP, CPI, FOMC tariffs, etc. And I've forgotten the trader's name. One trader like that, he was explaining, or he was speaking at an event, and then he was telling people how he took a trade, and then the trade just went sideways because an oil pump got burst in Nigeria. You understand? How can you predict this? How can you predict an oil pump or an oil how did they say, pipe? Pipe, not pump. An oil pipe is going to burst. Do you understand? So fundamental analysis is like the spot analysis. You get what I'm trying to say? On the spot, immediately you hear the news, you take action. Immediately you hear the news, you take action. You get what I'm trying to say? So investors will see that, okay, since this oil pipe has been burst, there's not going to be oil production for quite some time, or the oil production is going to be reduced. So I'm going to remove my investments from oil, and it will reduce the value of the Nigerian currency, because the thing that holds the Nigerian currency specifically has done what? Has been destroyed, or wako injury. Oil pipe no wako injury, so it has to recover. You get it? And then investors are not willing to keep their money in that market because they also have plans for that money. You get it? It also involves indicators like GDP, financial statements. That is if you are trading stocks. So yeah, moving forward. Fundamental analysis. The idea behind this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen. So take Ghana for example. Since the budget was released, since the budget got released, spare part dealers in Kumasi have come out to say they like the release of the budget because it has cause the prices of their appliances or the spare parts that they sell, and then the cars in general, some of them, it has caused the prices of them to reduce drastically. So seeing this, investors are attracted to this kind of market, or to the Ghanaian market now, because it shows signs of future strength. You understand why? Because things are low, trade is going to go on, prices are going to go low, standard of living is going to go high. You understand why? Because things are low. You can buy something you would have bought for, let's say, something you would have. What example can I use now? Let me look around. Okay, this fridge would have cost 20,000, but then now it is 12,000. You understand? So you can buy that fridge for 12,000 instead of 20,000, and then you can save more money. The more money saved means what? You can increase your standard of, you can get better apartments, you can get better tools to do better projects. You get what I'm saying? So the logic is straightforward. Strong economy equals more foreign investment, higher demand for currency, and the currency value goes up. In a nutshell, this is what fundamental analysis is. Good economy, higher currency value; bad economy, lower currency value. And then we can see signs of, or we can trace examples of bad economy in 1819, no, 20. So from 2020 to 2024 in Ghana, we can see bad economy. Ghana's economy was very bad. Inflation was running like something is chasing it in Ghana. Inflation was running like the devil has come out of hell itself to chase that price upwards. Everything was high, boy. So even you know that it was during this period that pure water, sachet water, became 50 pesos. Have you realized that from 20 pesos or so, 30, 40? I'm not sure it even climbed the 40 ladder. It just went from 30, boom, 50 pesos. You understand? So that means lower currency value. People are not willing to invest in that economy because things are high. Why would they want to build a business in the country when it will cost them like $10 million? You understand? Whilst if there was no inflation, it would have cost them like $3 or $4 million. Do you get what I'm trying to? So yes, good economy means high currency value. Bad economy means low currency value. Fundamental analysis. Let's say that the US dollar has been gaining strength because the US economy is improving. The Federal Reserve can increase the interest rates. Thus, investors would need more US dollar to complete transactions. This means the demand for US dollar would increase, and so would the price relative to other currencies. These events are usually seen by sharp price movements on technical price charts. So this is a clear example. I took the time to look for this. Sorry, my edit, the person who, so I have a team that makes what you are seeing possible, a team that makes the thumbnail, the YouTube thumbnail possible, the slides, they make it possible. Do you understand? I don't work alone. I work with a team behind me. Or I don't work alone. I work with a team behind me. So yes, Japheth took it upon took the responsibility to find a specific price chart where fundamental news was released, and then it caused a heavy shake in price. So you can see that from this zone, if you are looking at the image on my right side, you can see that there's a huge, or an engulfing, that's the best word, an engulfing bearish candle, that's the blue one, came down with force. You see, that's due to an economic data release. You get what I'm saying? Exactly. So to be on the best side of fundamentals, you would have to keep up with the economic data release of these news. You get it? So the Federal Reserve is one of the biggest market shakers in our generation. I don't know if there was another big market shaker in the previous generation, but what we know now is the Federal Reserve, and then we are sticking to that. You get what I'm saying? Yes. Now, Forex Factory, the home of news. Forex Factory is basically the home of news. The way you can see a museum is the home of historical artifacts. You understand? Forex Factory is the home of fundamental news. It's the home of sorry, a thought crossed my mind and then it made me laugh. It's very, very funny. So Forex Factory is the home of fundamental news, and this is where you can catch all the economic data events, and you can monitor them and then also leverage on them to take profitable trades. So if you want to monitor the fundamental news releases, you want to try and predict where the market is going to go with fundamental news, forexfactory.com is the best site to be. That's the best one we know of currently. If there are other sites out there that perform better than Forex Factory, I don't know of it yet. I'm yet to get exposed to it, you understand? But the one we know now is what we stick to, and that is what Forex Factory. So if you want to be a fundamental trader, Forex Factory should be on your list of favorite sites from now on. Sentimental analysis. Sentimental analysis is just, let me sum up sentimental analysis to you. So sentimental analysis is, sentiment, the mood of the market, the feeling, what traders are feeling currently, you understand? What they are feeling, what the place they want to go. So sentiment is fluid, you understand? It can get shook by the wind, it can get shook, but not wind like literally. It can get shook by people's view of, so a company like BlackRock can come out and say gold blah 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 forecast at this, you understand? And then sentimental analysts are just going to move by and they are going to, it's kind of like fundamental analysis. That's from my view. Again, I don't trade, I don't even know like into detail what it entails, you understand? I just put it here so that people have options, you understand? So it's not like I'm forcing you to be a technical analyst or a fundamental analyst, you get it? There's something called sentimental analysis, which I don't know a lot about, you see, but I have an overview of what it means. It's like the mood of the market, what traders are currently doing. Are they moving towards the buy side or the sell side, you understand? Where do they stand currently, you understand? So monitoring the forex market requires more than just technical and fundamental analysis. Understanding the sentiment of the market can offer valuable insights into future price movements. The sentiment, the mood of the market, the feeling of the market, the attitude of the market. So sentiment is the collective mood, feeling, or attitude of market participants toward a specific currency or currency pair. It reflects overall bullishness or bearishness of appetite. It reflects overall bullishness and bearishness in appetite for risk. So the overall bullishness are people gravitating towards the bullish side more or the bearish side more. So it reflects the overall bias. The word has come. It reflects the overall bias of the markets. Most traders ignore this aspect of analysis and will not be delving deeper. Exactly. Read more about it online if you are interested. Summary, and these are some tools we'll be using if we start our analysis, or when we start our analysis next week. For the technical tools, we'll be using charts, we'll be using the candlesticks. We'll not be using bar charts, we'll not be using line charts. But I mentioned it just so that people have options. Again, just so that people have options. You may not like the candles. I don't know who will not like candlesticks because it's the easiest to use, you understand? Yes. Trend lines I mentioned, support and resistance I mentioned, PD arrays. We are going to go deep into that when we start our technicals. And most of the things I've mentioned here are solely ICT concepts. That is what I use, that's what my community uses, so we stick to that. You understand? PD array, optimal trade entry, buy side and sell side liquidity, MMXM. And then the X stand for, both sides. So under the MMXM, we have MMBM and MMSM. You understand? So MMBM is market maker buy model, MMSM is market maker sell model. You understand? Then fundamental tools, economic calendars, GDP, CPI, unemployment reports, financial statements, income statement, balance sheet, cash flow, financial ratio, P/E ratio, debt to equity, ROE, etc., news sources, and central banks announcements. So these are tools you can go and research about before we start. Just if you want to go ahead of the sessions for yourself, maybe you know how you study, you understand, and you know that if you go ahead before the lecturer comes to teach what he is supposed to teach, you understand it more, that's fine. That's completely fine. So yeah, that is all it entails. Thank you very much for tuning in, market makers, market masters. Let me correct it online. Market masters, presented to you by Desmond Kidd. Thank you very much.